Wonderful, wonderful, wonderful. Cool. So as I was saying, this is Manara Advanced. I'm going to show you guys how you can go from not knowing what you're doing as a trader to now using our AI scanner, which will give you kind of a head start when it comes to finding actual setups. So for those who don't know who I am, obviously my name's Josh, also known as Mr. Bonds. That's actually my last name, believe it or not. And I've been trading and doing network marketing for the last 4 years. So I'm not an educator. We don't do this course. It's not part of EA. It's something that we understand how business works, and business works by giving value. So this is going to be a valuable call. It's an opportunity for when I know I started my trading journey, I didn't have the facilities that EA and the products that EA now give us. So everybody watches videos, you'll go onto the videos, you'll learn it, you'll write loads of notes, you'll have pages and pages and pages of notes. Then you'll go to your trading view, your own chart, and you won't see absolutely anything. Can anybody relate? Drop a one if you can relate. You go through all the videos, you jump on all the education calls, you jump on all the educators call, you go to your chart and you can't see nothing. You're like, what the hell? Like, what did I miss? Why can't I see how it works? What's going on? Like, is this a different chart? You start thinking the most of things. So the platform obviously and the product I'm going to show you guys now is something that is really, really helpful for those that are brand new to obviously trading, okay? So if you haven't gone through, okay, I'm going to make this clear. If you have not gone through the ECA Basics and the ECA Advanced, you can find that in your back office. You come to Forex, ECA, and then you're going to go through Forex Basics and Advanced. If you have not gone through that, what you need to do is, instead of being on this call, you need to jump off this call and go through the basics and the advanced in our ECA platform, okay? Right? You want to come off this call, go through the ECA platform, and go through that, okay? So what you're going to do is you're going to come to our scanner. Anybody that jumped on Samantha's call on Tuesday, basics, she went through how to actually set up your Manara scanner so that you can have it ready for when a trade does decide to come through, okay? So everybody should know the bottom. I'm not going to explain what's going on the screen. If you are confused, like I said, you need to jump on basics or go back to the ECA platform. So the whole point of this is you're going to come to the scanner, okay? Now, this is a scanner, guys. It's an AI. Yes, it works. Yes, it's smart, but it does not have common sense, okay? So we have common sense. The scanner just kind of goes off numbers and it prints out a picture, but we have to use our own common sense and our knowledge and our skill set alongside the scanner. Okay, so at the bottom, you're going to see loads of different currencies that you could possibly use. For this example, okay, we have NZD JPY, the New Zealand dollar against the Japanese yen, okay? It shows you your pattern, time frame, and it says it's incomplete. The fact that it's incomplete means that we still have an opportunity to get into the trade. So what you would do, okay, ideally, to decide which trade or which one you're going to go for, you want to look for a good risk to reward, okay? So over here, it says 3.34. So if you're risking $1 or 1%, you're willing to make 3.3%, okay? Below, you've got I think it was 3.76. So if you risk 1%, this trade, if you take the exact coordinates, you're going to make 3.76 times whatever it is you're risking. Okay, very, very simple. So me personally, I never actually take a trade that is less than a 1 to 3 because it doesn't make sense as a return on investment. Because let's just say, for example, okay, you lose 2 trades. Let's just say you take a 1-to-1 risk to reward. So if you take this first trade, all right, of 1 to 1.9, if you win 1, okay, that's fine. You're up 2%. If you lose the next 2, you're back to square 1. Whereas if you take a 1 to 3, it's very unlikely, especially with Manara trade ideas, you're not going to lose 3 trades consecutively. Maybe 2, 3 max. 1 to 3 is the minimum, right? Last week we caught a 1 to 10. So I could have lost 8 trades in a row, 9 trades in a row, hit a 1 to 10 risk to reward, and I'll still be profitable. Does that make sense? Drop a 1 if that made sense in the chat box, or 2 if you'd like me to repeat what I just spoke about when it comes to risk to reward, because all of this is irrelevant if you do not take risk to reward or risk management seriously. Okay? I know there's not 4 of us on the chat, so the rest of you, I'd like you to participate, please, and thank you. All right, cool. So let's get into it. Let's look for an actual idea, okay? Obviously, right now we're out of session, so we're not going to find a trade to take on today's session, but we can just find what you would normally do if you was in an actual session, okay? So let's go for, okay, NZD/USD here. This is a 3.34 risk to reward. So what you're going to do, guys, you can do this on here as well, okay? You don't have to go to your trading view. So what you can do is you can open this up. Okay, I'm going to go to trading view. I prefer trading view, me personally. But you can also use the scanner and the trading view tools on the left-hand side. But I'm going to personally go to trading view. So what you're going to do is you're going to get the exact same pair that the scanner's printed. So in this example, we're looking at NZD/USD. Okay, NZD/USD is what we're looking at the moment. Right. Another question I got asked as well, when it comes to which one to pick, right? You put in NZD/USD and you can see there's loads of options, okay? On the right-hand side, these are brokers that give the certain price of that currency. So really and truly, the best ones to go for are either Oanda or Forex.com, me personally, okay? Because you're gonna get slightly different pricing for different brokers. So when you come to it, use Oanda or Forex.com, okay? Please take notes if you're not doing it already, because everything that I'm gonna say, you're only gonna take in 20%. If you're just listening. If you're writing it down, you have a better chance of taking the information, okay? So I'm gonna talk slowly at some points, but definitely take down information, because if you're just watching this, like it's a movie, and I ask you tomorrow, what did we go over? You're gonna be clueless, not because you don't care, or we need to stop using our head as a storage cabinet, okay? We don't live in IKEA. You do not need to use your head as a storage cabinet, all right? So let's click forex.com for this example, all right? Did it not come out? Okay. NZD/USD. Cool. So we have a clear chart, okay? Now, if we go to the scanner gave us the time frame of minute M5. So that's a 5-minute time frame. So you're going to come to the same chart and you're going to go to the 5-minute time frame. Okay, so this is the exact same view that the scanner's given us. Okay, right? That's the exact same view the scanner is giving us. Now, like I said, you need to use confirmations alongside the scanner. Now, I'm going to give you guys some confirmations that I personally would use or look for when it comes to using the scanner alongside, okay, certain techniques, okay? So the first, it's not in order as well, but the more the better, okay? The first confirmation is trend, okay? Right? Everybody, you need to suss out and you need to find out what trend is it currently trending? Is it bullish or is it bearish? If it's bullish, you do not want to be selling. If it's bearish, vice versa, okay? So if the trend is uptrend, you do not want to be selling. So looking at this picture here, guys, just this picture that you guys can see, are we bullish or are we bearish? Okay, let's interact. There's 31 of us on, 31 of us on this call, okay? Are we bullish or bearish? Bullish, 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 fantastic. Okay, you guys are with me. Wonderful, wonderful. Cool. Why are we bullish? Because we have not taken out, let's just go off trend, right? Well, let's just draw this out. So we've got our low, we've got our high, we've got our lower, okay? We've got our lower high because it hasn't gone above here. Sorry, our lower low, it hasn't gone lower. And now we're looking to create a higher high, okay? So we're bullish. So you want to be looking for buys, all right? So trend, we can just write bullish, okay? That's our first confirmation, fantastic. So the scanner it makes sense because we want to be buying, all right? Very simple. Second confirmation that I personally look for, okay, is trend line, okay? Trend line, okay? Now, all a trend line is, guys, is an upwards or a downwards support or resistance, ceiling or floor. So for example, I'm going to try and draw out a trend line here. You guys can see that this coming up here, all right, this was a trend line that got respected a few times. Okay, now how do you know if it's a true trend line? You should have 3 touches. Okay, so in this example on my left-hand side, we have had, okay, 1 touch, we have had 2 touches, and we have had 3 touches. Okay, so that's a trend line. The 4th time, what normally does happen is it will normally break it, retest the other side of it, and as you guys can see, we've came back down all the way to where it pretty much started. Okay, so trend line rules is you're gonna have 3 touches roughly. All right, so rules for trend line. Okay, you're gonna have 3 touches to confirm. Anything, so let's just say 4 or more. 4 or more equals weak. It's now weak. Okay, if you was to hit something 4 times after the 4th time, a brick wall, for example, it's likely that you're going to break it. So when it comes to obviously this, I would zoom out a little bit more and I would look for another possible trend line. Okay, so what can we see here? I can see another trend line. Okay, right, so we've got 1 touch here. I can get rid of this now to make it a little bit more clearer. Drop a 1 if you guys are with me at the moment, okay? Like I said, this is not too advanced. This is pretty much, I haven't gone too advanced. It's pretty much basic information, okay? So, right, we've got 1 touch. We've got our 2nd touch. And we've got our 3rd touch. Now, like I said, you may get a 4th touch, but just be aware that the 4th touch normally does break it. So if it does come down here, it's going to do one of 2 things. It's either going to respect it, or it's going to break it like we saw previously, touch the other side, and normally come back down to where it first started. Okay? So that's just something to be aware of. 3, ideally, you want to take the trend line up on the 3rd touch. So on the 3rd touch, you normally get a reaction. On the 4th or 5th touch, depending on what time frame you're on, okay? So the higher the time frame, the more confident you can be. If it's a small time frame, you can't be as confident because it's a smaller time frame. On a daily time frame, you can be a lot more confident than you would on the 1-minute time frame, okay? So write that down. Trend lines or anything, if you've got something on a higher time frame, it will be a lot more reliable, is the word, than a smaller time frame. So that's another thing that we can look for, trend line, okay? Right. The next confirmation, okay? Let's get rid of all of this. Okay. The next confirmation that I would look for, guys, is Fibonacci, okay? All Fibonacci is, fibs, whatever you want to call it, is an opportunity for you to get a discount when it comes to buying or selling, because this is the game we're in. As an investor, you either buying or selling. Now, if I'm buying anything, no matter how much money you make, everybody loves a bargain, okay? I would love to get a bargain. Black Friday, whatever you want to call it. If I have the opportunity, I'm going to take the bargain. So what Fibs does is it allows you to get a bargain, okay? So what normally does happen, okay, is you draw your fibs. Okay, let's go structure, okay, on the 5-minute time frame. So we've got a low, okay, we've got a high, we've got a low, we've got a high, we've got a low. Oops. We've got a high, we got a low, we got a high, we got a low, and then we broke, okay, this last high. Okay, this is on the smaller time frame. On the 15-minute time frame, we're still bullish, but on the smaller time frame, we've broken structure. So what you can do, and it doesn't mean a lot of people find it hard to see where to pull your fibs from. Ideally, just looking off this and my experience, I would rather it go a little bit higher, break this high, to then come a little bit lower, okay, to draw your fibs. But for now, I'm just going to show you this example, okay? So what you do is you get your Fibonacci tool on the left-hand side. You draw it from your low, okay? And this is a perfect example on the left-hand side. So what we've seen on the left, we're going to get this on the right. So you draw it from your low up to your high. Your high is over here, all right? And we had a great buying opportunity within our 78 and 88% discount zone. This is our discount zone, okay? So this is a great opportunity for you to buy previously. So ideally, we want the exact same thing, but with a new area. So we're gonna pull our fibs from our low, our new low. Let's just say to here, for example, which I would like it to come higher first, but let's just draw it from here, okay? And you're gonna enter when it comes to our discount zone, all right? Why would you buy something at 100%, right? They've given you normal cost price if you can wait maybe a day or a couple hours or a couple minutes to get the discounted area, okay? So that's another thing you wanna look for, fibs, okay? If you want my settings on Fibonacci, I only use, you can take a screenshot of this now. Where is it? Yeah, take a screenshot of this. These are my coordinates. You can put whatever color you want in. For me, blue, we like blue. Blue's a great color. Okay. Right. Right. So take a screenshot of this. You can use fibs. If you struggle to draw out where to draw out your fibs, the scanner actually gives you it. Okay. So really and truly, point X is where you can grab your fibs. Okay. So you're going to come to here, you're going to grab the Fibonacci tool. You're going to draw it from X to C. Okay. X to C is where the scanner gives you where you want to draw it. Obviously, me personally, for now, if you're a bit confused, just go off of the scanner, okay? So you're gonna draw your fibs from X to C. So in this example, this is on a 5-minute time frame, okay? They've just pulled it from where we pulled it, okay? So they pulled it from, this area is marked up at 618.90, for example, 61, a little bit higher, okay? That's 618.90, 618.90, 61. Okay, so they pulled it a little bit higher. 618. How high have they pulled this? 92. Okay, they pulled it from here. Okay, that's fine. We're gonna go off the scanner. All right, and they pulled it from here to here. All right, so that is where they pulled it from. Okay, so our third confirmation, guys, is fibs. Now, our fourth confirmation that you're gonna look for, whether this trade is good to take it or not, is something called imbalance. There's a lot of words for this within the industry. Imbalance, you can call it fair value gap, okay, value gap. Some people call it insufficient pricing. So, I do not know how to spell this. You get the point. Insuf point, right? That's what you're going to use, okay? Now, all that means, guys, is that if you look from left to right, okay, there is a gap in the candles, okay? So let me see if I can see a previous example, okay? So if I was to backtest and I was to cut it from, let's just cut it from here, okay? Right? If you guys follow my mouse from here, every single candle is covered. Okay, so let's zoom into this. Let's zoom into this so you guys see what I mean. So follow my mouse, all right? We come up, okay? We pushed up and then we left this gap. Don't worry, price will come down and it will fill the gap, okay? It didn't fill it fully, so it's come back and actually filled the gap fully, okay? So if you look to the right-hand side, okay, this movement filled this little gap. We keep it moving, okay? It's pushed up. You guys can see it's pushed up aggressively, all right? Any aggressive push, what you're gonna see is the opposite candle. So this candle went up, okay? It was bullish, okay? What it left before it went up was a sell to buy candle. This is called an order block as well. So this is another confirmation you wanna write down. Order block, okay? You've got a sell to buy, okay? So sell, buy. On the vice versa, before this little push down, you had a buy to sell, okay? Before this push up, you had a sell to buy, okay? So this happens throughout the market. But going back to imbalance, if we look to the right-hand side, guys, this gap that was created has not been filled yet, okay? So I'm gonna draw it out, okay? So from here to the wick, the right-hand side has not been filled, okay? The right and the left-hand sides are relevant. The right-hand side has not been filled. So this to me is an imbalance, which means price cannot move upwards if it is upwards without filling it. It doesn't have to. Let me make this clear. It does not have to fill it. However, at some point, it will come back to that area. And this is where patience pays, because you may be so eager beaver that it hasn't come down in a while, but you've just now got in because of FOMO. Whereas if you took your time and you said, you know what, I've got a trend line, I've got a fib, so you drew your fib from your low to your high is over here, okay? It's not a coincidence, guys, that my 78 and 88 zone is exactly where it needs to get filled, okay? So this happened on Thursday, the 22nd, so today, sorry, at 12 midday. So midday, you would have drawn this out, okay? We've drawn a low to the high, we're bullish, we've got the higher time frame trend line, okay? So on a 15-minute time frame, we have a trend line. Remember I drew this trend line before? Okay, we've got one touch, two touch, we haven't got a third touch yet, okay? So this is another confirmation, okay? This is another confirmation. So we're gonna zoom back in on the 5-minute, okay? And we're just gonna wait. You have to wait in this game. Trading's boring at this point because 80% of the time, if not 90, you're just waiting. You're literally waiting. And for you to wait, who likes to wait? Especially for money. If you owe me money, you better pay it today. Whereas if we want to make money, we got to wait. All right. So fibs from low to high. All right. What you'll do is you can put your entry at the neck of the sell to buy candle. You can put your stops just below the low. So here is a 5 pip stop loss. And you can just draw your extension fib. Normally, it goes to the other side. So TP1, I do at the high. TP2 is at the extension. And TP3 is the further extension. So if you want to get my extension fibs as well, you can put this into your Fibonacci. So 38 is an extension to the upside. And 72 is also an extension to the upside. How long do you estimate if that would take to fill the imbalance? You can't estimate it. If we went on a higher time frame, guys, there's probably imbalance below that happen in God knows how long. So look, down here, this happened in November 2023 and it hasn't come back. But believe me when I say this, there are hedge funds and there are big people waiting for this area to come to. But some people may put in one trade a year and make multiple 7 figures. One person might do a trade every single month. So it's not about, you can't estimate it. Obviously, sometimes depending on sessions. So if you're not on a daily time frame and you're on a smaller time frame, you can roughly say, okay, if it doesn't happen in the Asian session, it will happen in the London session. If it doesn't happen in the London session, it should happen in the New York session. And if it doesn't happen, then you just have to wait. Okay, so let's go back to where we're currently at on the 5-minute time frame. Okay, right. So this is what you would have done. Okay, you've got 4 confirmations, and the 5th one that you can add is order block. Okay, so that is when you have a sell to buy or buy to sell. Okay, so order block is what you call it. Okay, sell to buy, buy to sell. Before an upwards push, you get the opposite. So if we get a push up, we get a sell before the buy. If we get a push down, we get a buy before the sell. Okay, drop a 1 if you guys are still with me. Okay, there's 30 of us on. I hope all of us are listening and taking notes. Wonderful. Is anybody a bit confused? Drop a 2 if you're a bit confused. Be honest. We're here to learn. We're all adults. We're not in class now. You don't have to be shy, okay? Wicked. I appreciate you guys, okay? If you're on a number 2, either hang in there or go back to the advanced and the basics. Okay, if you are confused, either hang in, all right? Keep telling yourself you're going to get it. Slightly confused on the order block. Okay, wonderful. Let's break it down. Okay, so order block, okay. Okay, so what an order block is before you get a push, either way, okay, if you get a buy or a sell, okay, you guys can see this black candle. That is a sell candle, okay? Before this big push, it leaves a sell to buy. Okay, so an order block is literally just this. If I dig into it, an order block is literally just the block of the sell candle. Okay, so the order block. So that's an order block, a sell to buy. Okay, we've got another order block. All right, sell to buy. So that's an order block area. Sammy, can you bring your charger, please? All right, vice versa. Okay, we're before the little push down. What did we leave? We left a little buy to sell. Okay, let's keep going. Before this push up, okay, we left a sell to buy. And this happens throughout the market, okay? Thank you. Mac, this is why I don't like a Mac. How's there one input? That's ridiculous. Right. Did that make sense with order blocks, guys? Should I take my laptop back then? Anyways, so did that make sense? I think it was Brandon that asked about order blocks. Before you get a push, either way, you get the opposite to what is what the move happens, okay? So for this example here, all right, we've got all our confirmations we needed. And the last one I'd probably look for, guys, is time and price. So what session are we in? Okay, so this is NZDUSD, guys. So what session are we likely to get the most movement in? If we're trading NZDUSD, okay, everybody should have known what sort of sessions you should be trading in. What session are we likely to get the most volatility or liquid in the market? Okay. Anyone? I'm assuming everybody's gone through the basics and advanced and know that information's in there about sessions. Okay, New York, fantastic. Okay, New York session is when we're likely to get a move within NZD/USD. All right, so these are the confirmations you can look for alongside the scanner. The scanner gave you the idea. The scanner gave you NZD/USD, and then it gave you the risk to reward. It said it's looking for a buy. It said what time frame. You just have to use as many things alongside it to feel more confident. If you just use the scanner, you may be 10% confident. If you have a trend line, you have you calculated the market structure and trend. You've got a Fibonacci area. You've got an imbalance, you've got an order block and time and price, you should be 90% confident that this trade will happen. And all it takes is for you to see this over and over and over and over and over again for you to feel more confident. So let's play this out and see what happens, okay? Okay, let's pause it, right? What time is this now in our area? Okay, what time does New York session open, family? What time does New York session open? 1:30. Well, it opens at 12:30 actually, but you get the move at 1:30 or 2:30. Okay, so midday, we didn't get a move. However, New York session 1:30, 2:30, we are now at price. Okay, so this would have been obviously here. Stops just below the low. It's hit our trend line. We're in our Fibonacci zone. You can set a buy limit, whatever's necessary. Me personally, I only set a buy limit if I'm not on my laptop. So if I'm out and about and I had this set up at home, I'd set a buy limit. If I'm on my computer, I will market execute. I will wait until price is in the area. Okay. So let's just play this out. Okay, we're blue. All right. And I think we're currently now here. So already, okay, we are up. Okay, risk to reward rise. Already, we're up at a 1 to 3. So really and truly, guys, you don't always have to hit a home run. A 1 to 3 is perfect. If you risk 1%, you just made 3%. If you risk 3%, you just made 9%. 9%, 27%. Depending on how confident you are is what you're going to risk per trade. But using extension fib and using that it works, we can wait for entry. So that's one entry. Now, the scanner's given us now another opportunity to get into the same trade. So you may already be in this trade, okay? You may already be in this trade, which is absolutely fine, because now you might be able, you have a bit of leverage, okay? If you're up 3%, this trade, you might say, you know what? I'm gonna risk 5%. Even if it doesn't go my way, I'm still up 1%, for example, okay? So this example now, what I can see, did that make sense, guys? So for one, if that made sense, that example that I just showed you, that was a perfect example of how all the confirmations alongside the scanner, that was a perfect trade. I don't even know why I didn't see this. I don't trade NZD/USD, but it works on any currency. Okay. Very, very simple. So now we can look at the next idea. So do we have a potential trend line upwards? Okay, just going off my eyes and going off what I can see from this point to where we're currently at, we could get a pullback. Okay, let's look from this low actually. This low looks a little bit better. All right, we could get a pullback. All right, we could get a pullback into this area here. Okay, another confirmation that I've just forgotten about. Okay, the more confirmations you have, guys, the more confident you can be. If you go into war and you have 7 weapons, you're gonna kick some ass. So if we're going to war with these charts, I want as much weapons as possible. And these are not hard. This is not like Wyckoff and ICT and all of these crazy strategies that are out there. These are basic tools. Okay, you can add support and resistance. Okay, right. So looking at this example, just looking at it, I can see where the scanner is trying to buy. We have a nice level of support and resistance. Okay, so we have resistance here. If we put it all the way across, right, you guys can see over here, we have resistance. We have resistance. We have support. It's come back to this area here. What did we get? We got resistance. Okay, we got more resistance. Then what it's done is it's broken it, and now used it as support. Yet again, Fibonacci, okay, from current low to current high, which the scanner gave us, sorry. We have an order block, we have imbalance, and we now have a nice support area and a trend line. So the entry that the scanner's given us is 61903. So you can get out a buy, long position, tap it wherever you need to tap it. The entry that they're giving us is 6.190. Stop loss is 61886. So stop loss is just drag it. 61886. Perfect. It's a 1 pip stop loss. That's ridiculous. So I'll round that up because the spread you're just going to get done dirty. All right, so let's just do a 2 pip stop loss. Okay. Ideally, you'd want it to see because what the scanner gives you, it does give you an exact entry point, but it also gives you a little box. Okay, so anywhere within that box is where you could potentially see a move. Okay, so the box starts at 61915. 61915. Okay, cool. So that is literally at the neck of this order block. Okay, so if we zoom in, okay, the neck of this order block is where entry is being given. We also have a nice imbalance. It also touches our trend line. It's also on our support and resistance. You can be confident in taking this trade. On our trend line, we've got 1 touch, 2 touches. We can now get our 3rd touch, okay? Take profit is 6196. Take profit 6196. 61962. Okay. Yeah, that's a dead to risk to reward. We like the big risk to rewards. Okay. So what you can do, even with this extension fib, okay, you can just do it to either. So this would be TP1. TP1 will be the high, which is, thank you, which is a 1 to 4. TP2 is now a 1 to 6. And TP3 is a 1 to 8. And we've also got targets, which imbalances are left on the left-hand side. Okay, so that lines up beautifully. And considering we're in the other trade. So you can probably take 2 trades from this. If you let's just say, for example, you was in the trade before, okay, you now have another opportunity to take a 2nd trade. Okay, so this trade actually does look banging. I'm setting an alert. Okay, so what's the time now? It's 10 to 9. This is not going to happen today. This might happen in Asian session. And not, yeah, Asian. Yeah. So Asians from, it's the opposite. It's basically the same time as New York, but in the AM hours. Okay. So it's from like 1 o'clock till maybe 3, 4 a.m. But this does look like a good trade, guys. Okay. So that is how you use the scanner. If you want to take a picture of the confirmations, You may not see it first time, guys. I promise you. When I go on my memories and I see my charts that I was drawing out, you can tell, number one, I didn't do art in school, and number two, I was trying. I was definitely trying. Confused as hell. Yeah, my friend, you need to go to the basics and advanced um, and study. You need to study, okay? You need to study. This is a life skill, guys. This is a life skill. For you to learn a life skill that has as many rewards as this does, I'll be totally transparent with you. Unless you are looking at 3 to 5 years to master this skill set, that doesn't mean profitable. Okay, a lot of you are profitable and it's been less than 3 months. However, if you want to master this skill set, you have to give yourself 3 to 5 years. Anything less than that, then you're one of a kind. You're less than 1% of people, but it's worth it. It's definitely worth it. Okay, so they are all the confirmations you would use along the scanner. Um, Uni takes minimum 3 years and costs 9K a year. Thank you very much. However, uni now, you get a piece of paper and you're probably going to make 30 bags, 50 bags max. And you have a boss, you don't have freedom, you're working for money. Yeah, it's you can't compare. You cannot compare. If you went to uni, you should be looking at 3 to 5 years with this as well. Where do you want to go for the basics? So I went through that at the start. You want to log into the EA Economy back office and you want to go through the ECA basics and advanced, okay? Then this is recording. So this is a great example of how you can use the scanner alongside the confirmations and just practice, 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 practice. But the right practice makes perfect. Practice doesn't make perfect. Because if you're practicing something the wrong way, you're not going to get perfect at it. If you practice perfectly, as in you're doing the right things, you're going to get the grips of this. Trading is life. Welcome, welcome. If it has 3 to 7 confirmations, run lower risk. Perfect question, bro. So if all of your confirmations are not there, you can't. So some traders that I know, they have different types of trades they take. So they have like an A star trade, they have an A trade, a B trade, a C trade. C trade, maybe, look, I've got 1 or 2 confirmations. I'm going to risk 1% or 0.5%. B confirmation might be, you know what, I've got 3 to 5 confirmations. I'm going to risk maybe 1%. And A is you have, let's just say 5 or 6. And then if you have all of them, which we have in this, you can risk whatever you want. You're willing to risk pretty much. This is an A star trade pretty much. Okay, we've got every confirmation that I personally would look for in a trade. Okay, we have the trend, we're looking for buys. We have a trend line, we're about to get our third touch. Okay, so we've got our first touch down here, right? We've got our second touch here. And we are about to get our third touch. We would like to get our third touch. Okay, fibs, okay, our Fibonacci zone, okay? This high is broken, which I knew would happen. Obviously, the scanner is an algorithm. But at the same time, this still could play out. So fibs, okay? We've got fibs. What else do we have? We have an order block, okay? Time and price is something we have to wait for a certain session, and we have a support and resistance. So this is an A star trade. Can you repeat about how many confirmations for it to be an A trade? So yeah, if you have all of these confirmations, that's an A trade. No, an A star, okay? So I'd say if you have all 7, it's an A star. This is an A star trade that we're looking at. What would make it an A star trade is if it comes to our area during our session, our time and price session. Okay, so right now it's an A. Okay, if you have let's just say 5, okay, it's an A. If you'd have 3 to 5, that's a B, and if you have 2 to 3, that's a C type trade, which means you'd reduce your risk. Is this making sense, guys? I really hope it is, because this is a perfect example. I'm happy this is recorded. Yeah, I got it. Just wanted to write it down. Wicked. Can we see entry, stop loss, and TP again? For this exact example or from the scanner? So me personally, I'm going to give you guys another gem. I don't think this is a confirmation. This is just something to you're going to realize is something called a quarter theory. Okay, because we actually are up against algorithms, so top banks, top hedge funds, governments, there's no guy sitting behind the desk dealing with millions and billions and trillions of dollars. We're up against algorithms. Hence why most people lose in this market, because algorithm doesn't have feelings. As human being, we have feelings. So how the algos are normally set up is called quarter theory. Okay, quarter theory. Okay, this is where TPs, entries, and stop losses, they round it up or down to whichever is closest. Okay, so these are all the quarter theories that you can have. So when it comes to entry, this is just, I don't think this is like, there's no right or wrong with this. This is just me personally, which I've been able to realize, is when it comes to entry. So this example here, all right, is 915. Me personally, I will round it up to 925. My stop loss, which I cannot get to. Right, let me use this for this. Okay. My stop loss. Whoa. Whoa, whoa, whoa. Please don't tell me that's why I tell everything. Okay. NZD USD, what we was on. Quarter three, that's what I was talking about. Okay. So for this example, my entry, I will round it up to 925. I will round my stop loss to 900. And my profit will be 7.5. Okay, there's no right or wrong. This is just something that I do personally. Okay, so that's what I will personally do. That's a 1 to 6. Okay. As well, what it does is it allows you to have whole numbers when it comes to risk to reward. So instead of 6.5 and 6, this, that, it's a nice 2.5 risk for 15 pip reward. Wouldn't it have to drastically drop now for it to line up for our trend line and hit entry? What's the time now? We have time until the market's closed. It's not a lot of pips. 6 pips. That could happen within the next 10, 20 minutes. If you think about it, from where it is or where we want to grab it to where it is now, price was here only at 6:30. So 3 hours ago, price was here. Okay. Cool, guys. So I hope you guys got value. I'm going to wrap it up there. It is 9 o'clock. Let me stop recording.